I'm going to break down what is cash on cash ROI and why it is your most important investment metric. And then as a bonus at the very end, I'm even going to show you how you can earn triple-digit cash on cash return on investment. So let's start off by going through what is exactly cash on cash ROI. The formula for cash on cash ROI, CCROI, is your annual cash flow. So annual cash flow, this is your net, divided by your total cash investment into that particular project. Now, this is the traditional form of cash on cash. I'm going to talk in a moment about a couple variations that we use. Now, why is it that cash on cash ROI is such an important metric? Well, it measures the rate at which your money is actually growing. So if you think about you're putting a certain amount into a project and the cash flow that you get back becomes this cash on cash ROI. We all know our whole goal is we start out with a certain amount of money, and over time we want to get that to become as much as we possibly can as time goes on. If you think about what a 200% cash on cash ROI would actually mean, looking at the formula, it means if you put $100 into an investment and you earned $200 back at the end of that year, you'd end up with 200% cash on cash ROI, which means you've doubled your money. Obviously, if you could double your money in a year, that would be amazing. That's what most people want to do. So let me show a little bit, though, why cash on cash ROI is the most important investment metric, because, again, it's that speed of growth. A lot of people use several different metrics. Sometimes people look at project returns. They look at, oh, this project's going to have a 30% return. This one's going to have a 50%. I should go with the one with 50%. Not necessarily true. Let me show you an example where you could have a 17 or 18% project return, but a 300% cash on cash ROI. Let's suppose you bought a property and you pick it up for $100,000. And then you put in for renovation costs and holding costs to keep the property and call all the expenses, closing, etc. Let's say you put in $70,000. And then you sell the property for $200,000. So your total invested into the property between buying it and the renovation costs comes to be $170,000. So that's your total cash investment into the project. And let's say you did this within a year's time. This will keep us within the annual cash flow version of cash on cash ROI. This means you sold it for $200,000, you put in $170,000. This means your profit, or your cash earned, or your gain in cash earned in that project is $30,000. Looking at this example, let's compute what our project return is. So in this case, our project return, so our $200,000 selling price minus our $170,000 is what it costs us to acquire it and get it ready for sale, divided by the $170,000 we invested, equals a 17.6% return. Again, that's the $30,000 divided by the $170,000 investment. However, let's look at what cash on cash ROI. Let's say in this example, we're able to achieve our $30,000 return. So that was our return of $30,000. And it only took $10,000 cash out of our pocket in order to do that. In this case, we actually made a 300% cash on cash ROI. So you might say, well, how were you able to generate $30,000 of profit on a project that took $170,000, but you only need to put $10,000 cash in? This is where you leverage the power of other people's money. This is why you don't want to get into real estate projects and try and do it all on your own. The more that you can do to leverage other people's money, the higher you can increase the overall return on your own cash. Remember, our goal is to grow our own cash as fast as we possibly can. So look at the difference there if you were able to use leverage in this project, allowing you to get your cash on cash ROI number now becomes 300%. Now I want to show you another variant of this formula, which is what we would call a gross cash on cash ROI. See, the traditional form of cash on cash ROI is done on an annual basis. Each year, what is your cash on cash ROI? But sometimes your projects don't finish in 1 year's time. In the example we just did, we assumed we were done in a year, but what if that same project took us 2 years or 3 years or 5 years? Then we start looking at cash on cash ROI just a little bit differently. So let's assume that this example was in 1 year time. Then it would be cash on cash ROI. Now let's say instead of only taking 1 year to do this project, let's say it took us 2 years. We would call this then that 300% is now what we would call our gross cash on cash ROI. And the reason we call it gross cash on cash ROI is because cash on cash ROI by definition is your annual cash flow. In this case, we're making our 300% return in 2 years. So it's not just 1 year. So our gross return is 300% over 2 years. Now, that's still amazing. I think anybody would be happy with tripling their money in 2 years' time. And most people are happy if they could do that in 3 or 4 or 5 years' time. So we're looking at the project as an overall, over the term, total term of 2 years, and calling that gross cash on cash ROI. So we know that's not our annualized. And then we create another metric that we look at so we could start balancing out different projects, which would be our average cash on cash ROI. So for an average cash on cash ROI, we take our 300%, we divide it by the number of years, so divided by 2 years, and that's going to be 150% average cash on cash ROI. Now, again, the main reason we're doing that is because we know we're not actually growing 300% every year, and we're averaging it out. Now, the reality is, our cash on cash ROI in year 1 might be 0 or could even be negative. We might have put our money into our project and we get nothing back, no positive cash flows in year 1. They're all coming in year 2 when we finish the project, and if it's a property, sell that property off. So we're using an average again so we can balance out what else would we be doing with our money over those next 2 years so we can compare it. So if you're doing other projects that might get you 70% cash on cash ROI, but they're done in 1 year, I could compare that against this project that is 150% on average on an annual basis. So, you know, there's a cousin to the cash on cash ROI formula called IRR. And this is what most investors actually like to look at and use, because IRR, internal rate of return that is, what it does is it breaks down based on the actual cash flows received each year, gives you what your rate of return is, as well as also includes the effects of compound interest. So it's definitely a more complex formula, something you're going to want to put into like an Excel spreadsheet so that you can get to those numbers. So we use cash on cash ROI as a general, quick, easy way to get to a project and not have to go through all the complexities through Excel. Now again, always follow up with that. It's not a bad idea to do that, but the idea is simply how fast are we growing our money? And why is it so important to look at gross cash on cash ROI? If we think about it over the term or even an average cash on cash ROI, because many projects you may get into may take multiple years to get to, but you can start evaluating them. In fact, let me give you an example that a lot of people can relate to. Think about buying a stock. Most people, when they invest in stock, especially new startups, there aren't even dividends in the first years. You're not receiving any cash back on those investments, but those could still be incredibly amazing investments. Let me give you an example that if you had bought Amazon. Check this out. If you had bought Amazon back in 1997 when it went IPO at $18 a share, and you put $10,000 into Amazon. Now, the value of your stock as of May of 2020 would actually be, roughly speaking, about $12 million. Yes, that's $12 million if you had invested in Amazon in 1997, $10,000 worth. So let's figure out what would our gross cash-on-cash ROI be on that particular investment. So in this case, you end up making $11,990,000 divided by your investment of $10,000. This gives you a 119,000% cash-on-cash ROI, gross cash-on-cash ROI. I'll actually put the right underneath here. We'll put this as gross so we know that this is not annual. This is over the whole time of the term. Now that's over 23 years, so we can calculate that out to be 5,200% average cash-on-cash ROI. So think about that. You would have made a 5,200% cash-on-cash. That means your money was growing on average every year. The amount you put in was yielding you back 5,200%. That's amazing. So as you start looking at different projects, where else would you put your money today that over the course of that year, you're going to earn a 5,200% cash-on-cash return? It's almost impossible, which is why it's so important to diversify your investments. We even created a company called the Aichele Group that allows people to actually get into real estate investing, being part of a company rather than trying to do it all on their own, and building the idea of let's build the stock value of a company that invests so that people can see incredible cash-on-cash ROIs over the course of time. And that's why we want to use this as a metric to evaluate all of our investments, is what is our cash-on-cash ROI. Now, I promised you as a bonus I was going to share with you how you can actually get triple-digit cash-on-cash ROI, and here it is. If you invest into real estate, or any project really, but if you make your investments with the idea of not putting all of your own money into the projects that's required to get the project done, you have the ability to get triple-digit cash-on-cash ROI. So what you want to do is, if you do need to secure a property with your own capital, you want to bring in partners that come alongside you and allow you to get some of your money back out of that project. Either help you put it at the beginning or help replenish as quickly in the process as possible to get your money back out. Now you can start spreading your same dollars across multiple properties. So this way, you're not all invested into one, you're invested into multiple, and each project is now yielding you double or even triple-digit cash-on-cash ROIs. This is such a powerful concept that we actually formed our own company called the Aichele Group that actually partners alongside individuals like yourself to help you fund your real estate investment transactions. This allows you to spread your money across multiple projects, earn double and triple digit cash-on-cash ROI, and at the same time, we're able to earn good returns as well, which allows us to keep bringing in dollars from the marketplace of people that want to passively invest into real estate and have nothing to do with it. So it's a great win-win-win situation for yourself, the Aichele Group, and of course, the investors that we have partnering with us. Now, if you want to learn more about how you can generate triple-digit cash-on-cash ROI, check out the next video that we queued up for you. We take you step-by-step through it. And maybe you're someone who has an interest in actually partnering with the Aichele Group to become a partner in real estate transactions as we grow and help investors across the country in an amazing company, helping everybody create win-win situations. Go ahead and click the link down below and check out what we put together, explain more about what the Aichele Group does and how you can be part of this amazing concept that we've created. If you like what I had to share with you here today, don't forget to click the like button, maybe drop a few comments, and don't forget to subscribe and turn on notifications so you don't miss any of the new content that we put together for you.